Hello, everyone. Welcome to the stock-specific class here for Thursday, December the 2nd. Looks like we have a little bit of a possible bullish reversal in the market today. Not really happening the way I usually like to see a bottom kind of take place. We'll take a look at that on the charts here. Real quickly here on the direction alerts. Not much to go over here, just to show that we are kind of in an oversold area, not in an extreme oversold. That would be in this area right here, but we're in kind of an oversold area. So we're in a place where we could get a bounce or a little bit of a rally. The market has moved down a little bit too far, too fast for momentum and breadth. Same thing. Sentiment, though, is still very high. There's just not a lot of fear of any bigger correction. And I'm going to keep pointing this out because we do want to just pay attention to that. Now, obviously, we don't get big movements in sentiment. You're not going to be having something significant happen every single time we look at these indicators, all these indicators. But you want to be able to notice when there is a little bit of that divergence, or there is that little bit of a warning. And what I keep talking about, and what I will keep talking about, is the fact that there just isn't any fear. There's just such a strong buy the dip mentality that that sentiment stays in that high range. Now, what's important again to realize about that is that that's what fuels the panic selling when the selling begins. That's what causes, when the market does finally break and have a big sell-off, that's what causes it to drop so dramatically and so fast. And in many cases, if you're not prepared for it or positioned, it could wipe you out pretty quick. So remember that markets and stocks always fall a lot faster than they rise. And if you think there's going to be plenty of time once the selling begins to be able to get out in kind of an orderly fashion, it never works that way. It's always kind of a sharp move when it finally happens. Although there's a lot of little warning signs ahead of time usually, and there were this time as well. I mean, we were prepared for this correction that took place, and it didn't hurt us too bad. We kind of went to the sidelines a little bit in the portfolio, but that's what I'm trying to teach you in these classes is how to look for these little clues, how to recognize them, and then how to use them in your trade management. Let's go right over to the before we do that, if you look at the index tab here, this is another sign that we're oversold. You'll notice the buy sell ratio numbers there, they're below 1. Now, typically when we're overbought, what we'll see is double digits. You'll see like 12 buys for every 1 sell or something like that. So you have double digit buys to sells. This is just the opposite. You're getting double digit sales and higher than that in this case. If I have I got to use my calculator here, but there's 204 sells divided by the 16 buys. There's a 12, almost 13 to 1 sells versus buys. That's the S&P Mid Cap 400. But the point is that you see a lot of very similar ratios like that, where now we're seeing the double digit sells to buys. So it would be just the opposite. You get these type of conditions, and now you start to. This is what it starts to look like near a bottom as you start to see these extremes. Hold on here. So let's go over and take a look at the market update watch list here. Just going over the indexes here, but I want to start with the Qs, because the Qs, they were the ones that didn't sell off very much. They were kind of holding everything up, holding the market up. They were resisting selling off. Apple was a big part of that. Apple actually kept moving higher. A lot of FANG stocks were holding things up. And so I was kind of waiting before I really expected this correction to be over. I wanted to see the NASDAQ 100 have kind of that C leg or that sell-off leg, and it does look like it's a possible ABC pattern now. We had the big drop yesterday, and in the area I was telling you to watch on the NASDAQ 100 was this breakout area right here, this 384. We came right down to it as the intraday low today, but we did on the NASDAQ 100, we did get a gap down. Remember, I kept saying that what I really want to see is kind of that day where we gap down, and then we start rallying back up from that gap down. And last night I was looking after yesterday's move where we had that big drop into the close. We closed near the lows of the day. I thought, man, this is setting up perfect for a gap down. But the futures, at least before I went to bed last night, all the indexes were up about 0.5%. Looking at the futures, S&P futures and Nasdaq futures, which meant we were probably going to gap up again. And I thought that's actually going to be bearish because we're likely to get the same thing that happened yesterday, where again yesterday we tried to gap up. Here's where we closed on Tuesday. Yesterday we gapped up. And we started to go up a little bit. Looked like we were going to, everyone was talking about how the market recovered from that sell-off day and was roaring back. And then what happened? It reversed, came all the way down, closed near the lows of the day. I thought the same thing could happen today if we were to gap up. Well, the NASDAQ 100 actually gapped down. We did get the gap down. And a lot of that was Apple. Apple had a big gap down, and I think that's what caused the NASDAQ 100 to have that gap down. And it started to move back up, and it has moved back up off of those lows. You say, well, that is a bullish reversal candle. So what's the problem? What problem do I have with that? Well, the problem was we really didn't. You like to see a big gap down that really causes everyone to say, uh-oh, what's going on here? And I like to see it before the market opens, having those futures down to where everyone anticipates that it's going to open lower and it could get ugly. And this did gap down, but it was such a small gap down that what it does is it actually makes things worse because, like I said, if it would have gapped up right at the open, I would have thought, this is probably not going to hold. We're probably heading lower. My thought process this week was that we have that jobs report tomorrow. That comes out before the market opens. That would be ideal for the market to gap down on that news and then start rallying back up. It almost seems like it was setting up for that. It still might be. Maybe again, I don't have a lot of confidence in the rally today that this is the bottom and this is going to start moving up. It's definitely possible. There are a few candle patterns that would suggest it could rally from here, but it like I said, without that, it's hard to explain because it's part of it is an emotional thing. It's not a mathematical equation that says, oh, this happened today and this is a bottom. It's that feeling of that panicky open that then rallies back up. And I don't always get what I want. There's a lot of times when I'm talking in class here and I'm like, this is what I want to see, or this is what I'd really like to have happen, and it doesn't happen. But the cool thing is when it does happen the way I expect it to, that's when I know I can get aggressive, and that's usually when I get the big money trades is when it does line up. And that's rare. It doesn't always line up the way I'm expecting it to, but when it does, it works out usually pretty well. Days like today, though, are frustrating because it's partially there, but not strong enough for me to really be aggressive. And in fact, I'm more in a wait and see mode right now where I may buy something here or there, but I'm not going to be loading up on anything because I don't quite trust it yet. Now, the things that the bullish thing we have going for us here is the QQQ did end up selling off a little bit. It did rally off of that breakout area over here that broke out, and so that would be a bullish argument there. A bearish argument before I move on from the Qs is that this looks like a bearish head and shoulders pattern, and this is the neckline, and all we've basically done is broke through the neckline and then retested the neckline, and that happens all the time. You break the neckline, you get the retest of that neckline, and then it usually ends up moving lower. So that's something to keep an eye on if this rally day fails, is kind of those head and shoulder pattern characteristics. Does that kind of play out the way they normally play out? Going back here to the S&P chart, we have this is a bullish inside day. We've had a drop right here, and we had a big candle yesterday, and today's price action, we did gap up a little bit today on the S&P. We're trading higher than where we opened. We're inside of the candle the day before. You've seen me talk about this pattern a few times. I pointed it out. It is a bullish pattern, but it's not as strong a bullish pattern as the hammer candle formation, or even when you gap down and rally back up and close higher than the open, but still lower than the day before. Those are stronger bullish reversals. And what really, again, I don't know why it's reversing right here. If you want to say, where's the support? What lines up with support right there? Not the breakout area. The breakout area, we closed below the breakout area yesterday. If you have a charting service that has moving averages, and the 50-day moving average is something that stocks will sometimes react to. It closed below the 50-day moving average, so that wasn't holding it to support. So it's rallying back up today, and it did rally back up above that breakout area. But I don't know why. Buyers stepped in right there. I don't see any reason for buyers to step in right now. Why is that important? Well, as a technical trader, that's all I'm looking for. I'm looking for these levels of where buyers come in and sellers typically come in, and they typically come in at previous support or resistance levels or previous significant areas. And this breakout area was significant. The next area is down here. And so that leaves a big question mark for me. Do I trust? Yes, that's a bullish reversal candle, and it could very well work. I mean, these are very short-term in nature, so maybe it means that we have another rally day, and it does rally off of that bullish reversal formation there. But then it might still have that further downside. So it just is. In other words, what I'm trying to say is, be careful here, okay? You go back to the directional alerts. We were oversold, but we're not extreme yet. Yes, this is an oversold area here, but we could become extreme. There could be that flush out move. We could have further downside. Now, I hate to keep complicating things here too, but you have to add in the complexity of the time of the year. This is typically more of a bullish time of the year, and it still could be. Okay, everyone's talking about Santa Claus rallies, and don't get me started with that. I've already mentioned that a million times, how ridiculous. If they could pin it down to 1 week a year that's always bullish in December, then you can call it a Santa Claus rally. But when your characteristic for a Santa Claus rally is anywhere from Thanksgiving to Christmas, to the end of the year, any market has a rally in that period of time every year. So it's ridiculous. But if you're looking for some sort of a rally in December, it's still definitely possible. Back to our update here. It could be that within these early days of December, we still get that flush out move where we drop even further, get that bullish reversal, and then we rally up from that. We drop far enough to where if we get a strong reversal day, we could have a nice rally through the end of the year. So it's not that I'm trying to avoid being bullish. It's just that this is, as I analyze this, it's just it seems like a sucker move right there. It just doesn't. It seems like I'm going to be buying into something that's going to fail, and then when it does fail, because that fear hasn't been in the market yet, it's going to drop pretty dramatically, and I don't want to get caught up in that. Now, on the flip side, you say, well, why not buy some puts here? It's not strong enough. I don't want to buy puts on a day like today. It is a bullish reversal day. Now, if that's followed by a bearish reversal candle, then, I could look at shorting stocks or buying put options or something like that, some way to try to trade that move down. But yeah, I don't see that yet. So the Dow's kind of in the same boat. I mean, again, bullish inside day right here. Here's the support. We didn't quite get there, and so it's like it's just weird. Like I said, I was fully expecting. I was fully expecting that we'd get the gap down today, right to that support area, and then start to move back up, get that bullish reversal. And like I said, maybe that happens tomorrow. It looks like, that would create a little bit of panic. It looks like it's reversing today, sucks some people in. You get a jobs report that freaks the market out, and it opens right down here. All those people that thought the market was rallying from there would be freaking out. They'd probably be selling right at the open, and that could create that reversal day. If so, then I might start to not necessarily get aggressive, but definitely start looking to buy some things if I get that tomorrow. Russell 2000, same thing. I mean, your support level is down in here. You didn't quite get there. Bullish inside day. So the Nasdaq 100 was the only one that did gap lower at the open and then reversed. And like I said, the big part of that was Apple. But look what Apple's done. I mean, now I had a put option on Apple because we had this bearish reversal day yesterday, and it did well I got out the open, and it did gap down. See, so Apple had that big gap down, but look at it, it's been roaring right back. There's definitely people that are buying any dip on Apple right now, and that was probably a little bit of a dangerous trade when you get people that that bullish on a stock. Sometimes it can be irrational. It can hold it up longer than it typically will hold up, and it can sometimes reverse bearish reversal days. You get a bearish reversal day, and the buyers are so strong they shoot it right back up again. But it worked out. I was happy with the trade. So, and it was just a quick option trade overnight. So, all right. We don't need to necessarily look at other charts, but one thing, we do have the bond market close to breaking out. I talked about this on Tuesday. That see if that breaks out. That would tend to be a little bit more bearish for the market that breaks out. Now we do have a bearish reversal candle right at that resistance area. Again, that throws a little bit of that. The bond market isn't helping us out as far as trying to determine if we rally up from here, or if it has another move lower. If it has another move lower, we're likely to see the TLT break out. If it doesn't, if the market does start to rally here, we'd likely see the TLT drop a little bit. All right. In our portfolio, not much is happening here. We're down to one stock. Now, I have made some changes. I don't know when I made those. Sometimes I make them in class, and sometimes I make them out of class. So let me go with my portfolio. Let me go through the trading history here. I always want to be transparent in everything I'm doing here. So, for those of you that are trying to follow results and make sure those exits I'm getting out of are this shows basically the last couple of weeks of what I've done since November 11th. My last decision was on the last day of November. I haven't done anything since then. Didn't do anything yesterday. But a lot of this involved stopping out of positions. Some of these, there was a loss of 1,300 here, a profit of 1,200 here, loss of 1,500 here, profit of 288, loss of 1,400, loss of 1,200, gain of 1,200. A lot of just kind of back and forth, which is typical when you have a market it's a little bit kind of whipsawing back and forth. We had a rally before this recent sell-off, and so, but I went to mostly cash. you know, but these are the trades that I was in, and you can, again, you can kind of, you can go through the recording of this. If I'm like, I'm just going to keep, I want to keep this picture up long enough to where you could pause it in the recording and then write down anything you want to write down off of this. But let's move on. Let's go to current holdings here. Now, LLY, I still plan to hold it. I'll flip it to the signals here in just a second, but you know, I do like this bowl-shaped move. Now, originally it had what looked like this ABC pattern right here, and this is when we entered the trade, thinking it could break out from there. It ended up that it ended up being a little bit larger possible ABC pattern. It's still a possible ABC pattern, but like wave A, wave B, wave C. You have a situation here where if this is wave C, it's about the same length as wave A, a little bit longer, but it's in that about range, close enough. We did see a little bit of a bullish type move. You say, well, that doesn't look bullish, but it is, because what it does is it shows you that buyers are showing up. The stock opened up, it opened higher, and then buyers pushed the price all the way up here, and the sellers were able to push it back down again. Now, this is not a strong bullish reversal candle, but it's showing you that there's buyers there. The buyers were able to push that price up after this drop. They weren't able to close it higher or close it up, but they were able to push it up, and it didn't go any lower. It didn't drop any lower than where it closed the day before. So it's kind of that early warning or early sign there's buyers there. And then you have today where it did gap lower, gap down, and it's trading higher than where it opened. So you're getting a little bit of a bullish reversal candle right there. Okay. So you combine all this, and I say, I don't see a reason to panic and jump out of this thing right now. Let's see if it can reverse and move back up. Even if this thing gets back up to the breakout area, that'll be a good trade for us. We'll make some money on it. So I'm holding on to this one. I don't see a reason to sell. If we switch it over to signals, it did have a little bit of a sell signal today, but remember, that's a bullish reversal candle, and that could be leading to a move higher, especially if the market does rally from here, which we're not overly confident it will yet. Now, I did boot a lot of stocks out of the watch list. I think I'm gonna add something though from the watch list. A lot of these were those oil stocks. Well, this was a printing. Let me get the right watch list here. All right, ARC, now LPI, these are some of the oil stocks that could start to move back up. Again, I'm keeping these in there is because that looks impulsive. This looks like maybe a deep ABC. They got to show me something here pretty soon, or I'm going to boot them out. And we still want to wait for that confirmation anyway. They have a long way to go to get back up to that buy signal. So, but I left them in there, these oil stocks, just in case they start showing me something. Maybe, I just want to make sure that if oil starts rallying again, that we don't miss the rally, that we still have a chance to get into some of those. NOG. Riot, Riot is kind of tied to Bitcoin. Bitcoin's been a little bit bearish lately. The reason why I kept this on the list here is you got this impulsive move up. This looks like potentially wave A, wave B, and we could be in wave C. So it could come down a little bit further, and then if it does start to move back up and goes back to a buy signal, we could get in. So I kept that in there to just kind of watch it. It has a 96 strength rank, so it has a good strength rank there. The one I might add is LPX. This is in the construction sector. You can see it has it's going to go back to a buy signal today. Nice little higher highs, higher lows through this little uptrend through here. And you look at, if you go look at the sector, if you look at construction right here, it's up on the list. It's been up here pretty high, but you look at some of these stocks, and a lot of them had big moves today. BXC, Lennar, I think, was in that group, down a little bit further. Maybe it was under the buys. Where's Lennar? Oh, these are Lennar B shares that see big. It looks like it's taken off, and again, maybe it doesn't keep doing that, but of everything I looked at, that was really the only thing that in the list that I really liked from today that maybe I could add. So let's go ahead and add that. I don't want to be adding a ton right here because, again, I'm not convinced that we're at a bottom, but if we do rally up a little bit, we could try to take advantage of that. I need for the watch list. Here we go. LXP right here. So I'd probably have a tight stop. I'm going to put it down below here just to give it a little bit of room. That would be around, what would that be? 60. That was a low that day was 63.25. So let's go 63 as a stop. Put this little blue plus to add it to the portfolio. Gonna put the stock specific class. Stop price at 63. If I did 100 shares, what would that look like? About 7,000 in the trade. Portfolio at risk below 1%. We could bump that up a little bit. So let's do 150 shares. What does that look like? Maybe that's right at 10,000. Right at 1% portfolio risk. Yeah, we could do that. Let's go ahead and add that purchase and go to my portfolio there. All right, so we've added that in. And if you're wondering why I've done some things I've done, again, a lot of it's trying to just, when you're in these types of conditions, you want to get a little bit more defensive. You want to preserve capital, and having that big of a drop where we only had a less than a $10,000 drawdown is good, really good. We've got a lot of capital left that we can recover if we do bottom out, start rallying back up. And there's a lot of these stocks, high strength ranked stocks, that have pulled back pretty deep that could start taking off again. We're not going to get any more aggressive than that, though. Let's go and add some stocks from our sectors here. This is a stock specific class, and then we can go run through that watch list here real quick at the end. Under computer and technology, I want to add this INVE down here. It's a 95 strength rank. And it's pretty obvious what I like. You got this, it's trending up. You have this impulsive move up, and this kind of choppy pullback right here. About a 50% retracement of that move up. This is an area where if it's going to start going back up, you'd expect it to start going back up. Had a bullish reversal day there. Bearish reversal day here, and today it's up from, it's kind of whipsawing a little bit back and forth. But we're waiting for it to go back to that buy signal anyway to make a decision on that. And again, I emphasize this from time to time. For me, what I'm doing is when it goes back from hold to buy, I'm going to get that email, and then I can make a decision. Doesn't mean I have to go buy it. We're putting a bunch of these stocks in the watch list. Doesn't mean we have to buy it when it goes back to a buy signal. The email is just telling us when it goes back to the buy signal. Maybe I don't want to add a whole bunch of positions in the market environment I'm in. So don't feel like you got to be compelled once it goes back to a buy signal. You see a pattern you like, it goes back to a buy signal, you have to get in. we're going to make a decision if it goes back to a buy signal. That's kind of the minimum confirmation we're looking for, is to wait for it to go back to that buy signal, and then we'll make a decision. So note, again, for those of you that are new and you're trying to kind of develop a routine, note the routine of how I do these classes. I start with looking at the market conditions, trying to look at the charts, the trends of the markets, the price action of the markets. Now, again, I'm using 25 years of experience to do that, and I get it that if you're brand new to trading, you have, maybe some of you might only have 2 months of experience, but that's what you're working towards. You're working to learn it just a day at a time. That's how I did it, a day at a time, month at a time, year at a time. And again, having me explain it to you, everything I've learned, you get to shortcut it to where I had to learn a lot of this the hard way. I didn't have someone to outline some of the stuff for me. A lot of it was through trial and error, and a lot of getting beat up over the years. But that's where wisdom comes from, right? The wise people are the ones that have had the crap beat out of them for several years, and now they're wise. You're not born wise. You're born. Your wisdom comes from trial and error. All right. So, and actually, the wisdom can come from those that are wise enough to follow the wise. And so you don't have to go through as much pain as they did. All right. So we'll throw this in the watch list. Keep an eye on it. Another one I want to go to is we're going to, in the computer technology, again, what I've been doing lately too is just going under the buy sections. The stocks that already have buy signals, have those pulled back a little. They haven't quite gone to a hold signal yet. They could have a nice bullish ABC pattern or something that we could consider. I was looking at this Camtech 93 strength rank. Actually, it's going back to a hold today, so it'll show up in that hold. But now this might not be done correcting. I just noticed again the breakout on a pulsive move up, and then it's been chopping back and forth. It could be that this was wave A, this is wave B, and we're in wave C. Last 2 days have been down. Maybe it drops down to this area here. Why do I come down to this area here? Well, this goes back to typically on ABC patterns, wave C will be about the same length as wave A. So if this moved down, this is the move down from here. It tried to rally back up here. I just take that distance and try to estimate about where that might pull back to. It doesn't always pull back exactly that spot. It just gives me in my mind an expectation of where I'd expect to pull back to. So I wouldn't be looking to necessarily jump in right here. Although again, it's had several touches. Look at these intraday lows all right here. Maybe it does find support right there and then take off. But there again, if it goes back to a buy signal after today's hold signal, I'll get an alert. I can make that decision. I don't know if I set up. I'm going to let me add to this to the watch list here. Click on this little green plus arrow up here. I didn't do that on the other one. I need to go back and do that. We're going to add it to the stock specific class watch list. Save it and go to the watch list, and we're going to put that alert. I can set up an alert right here where it'll email me when it goes from hold to buy. Well, actually, it's already at a buy, right? It's going to go back to hold tonight when it updates overnight because it's at a hold signal, but it hasn't updated yet. So I can't put the alert on until it goes to hold because it's going to let me go when it goes, alerts me when it goes from hold to buy. I can do it on the other one, though, if we go back to the one I didn't add yet, which was the INVE. This one. Let's add it to the watch list. Stock specific class, save and go to watch list, and we're going to click on the alert box right there, and it's going to send me an email when it goes from hold to buy. All right, under autos, down here a little ways, I like Ford, the chart of Ford right here at the top, 91 strength rank. Again, look at that nice little consolidation, nice little move up in October, November. And it's got a hold signal right now. Now, again, this is one that you could either wait for the buy signal or wait for it to break out. See if it can break out of that range. So let's add this one in. And if we go into construction, this is one we've traded before under the hold section right here. This ASPN, 96 strength rank. Again, nice uptrend. Just need it to start to move back up. This is a deep enough pullback here. We just need it to go back up to a buy signal, and then we're probably good on this one if it could do that. Let's add it to the watch list so we can get the alert if it does. Now, another place you can go, especially when the market is pulled back like this, and another area you can go to look for potential trades is you can go into your muscle stocks tab. And there's a lot of good scans in there. Now, one of the more obvious ones that would make sense is the new buys. Which stocks have gone to a new buy signal? Now, I'm not going to buy them just because they've gone to a buy signal. I want to see a pattern there, and I don't want to be chasing something. Let's put in our muscle scans here, and then our new buys. So Build-A-Bear went to a new buy yesterday, but I don't want to chase that move. I mean, it was down here and it went up there in one day. It's probably already gone to an extreme reversal risk on that one move. So I'm not suggesting that everything in here, even though it's a new buy, these stocks have gone to a new buy signal, that you're just going to run out there and go buy them. But sometimes you can find some scans in there, or some patterns in there. Now, one thing to be aware of, though, too, if you're going to go through this list, is that you don't want to really be going below a 90 strength rank. So a lot of these stocks are ranked by strength rank. So that's a 98 strength rank. I don't want to chase it, so I'm going to move on to the next one. VNTR, 98 strength rank, but I'd like to see it start moving up the right side of that bowl before I start looking at that one just yet. AMBA, this moved up on an earning announcement. We were watching this. This is in our watch list, but it had the earning announcement where it jumped up here. I don't want to chase that. I usually don't, at least. I mean, you're free to do what you want, but so again, we're starting to move down. 94 strength rank now. And I'm going to get to the ones. There's a couple of them that I did want to add. HVP is one of them. 93 strength rank. That's possibly wave A, wave B, and we're waiting for maybe wave C to end. It's gone back to a hold signal there. So let's throw this one in our watch list. See if I can put I can't put the alert on because it's going to go back to a hold signal today. And then this ACLS, 92 strength rank. Again, I just like the consolidation through here after run up, very kind of like similar to Ford. It tried to break out yesterday. That's what created the buy signal. It's gone back to a hold signal. So it's going to be the same thing on this one. We won't be able to put the alert on it yet, but we'll put it in the watch list. And I'd probably want to wait for it to break out, to buy a breakout there. That would give me a little bit of, hopefully give me a chance to see if the market is rallying along with it. And that's going to be key. Something to watch this week is does the market rally up from this kind of bullish inside day that it's had on most of the indexes, or does it roll back over again? All right, so that's really all I'd want to do today. We could kind of go through the watch list. We did start to go through the watch list here, I think. Remember, these early ones were the oil stocks. I'm going to quickly go back down through those. I don't want to. And then LPX is where we stopped because I ended up getting into that one. So I can boot this one out of the watch list when I get a chance. AMBA, I'll keep it in the watch list because if it sometimes on these gap up on earnings, they can pull back a little bit and then start to take off again. STKS, nothing looking any good right there just yet. In fact, that one might be close to booting out. This one could be close to booting out. I'm still waiting to see if it can give me a higher low at least to start to rally off of this point at some point. We did have a higher high right here. So there's still a little bit of hope that one could start going. Oop. That one's on life support as far as staying in the watch list, but I'll keep it in there for now. TGLS, this is one of the ones we went over on Tuesday. We added to it. It had a nice old bullish candle right here. We're just kind of waiting for it to go back to a buy signal. Let's see how close it is to going back to a buy signal. You can see right up in here how close it is. It's not real close. So if we had a big bullish reversal day like that, and it's a hold signal, and let's say it was right here, you know that this thing is right here. That's when you know that then another up day and you should be in that buy signal range. But here we're right in the middle of the hold range, so I would imagine it needs to get back up in this area here before it goes back to buy. And at that point, you probably want to see if it can break out first. So that's fine. I like the pattern. GUIN, this is another one that we added. It's kind of the same thing here. You got a sideways range here. This one is pretty close though. It wouldn't take much. It is up today. Here's where it is today. It probably right about the point it'd be breaking out when it would be when it goes back to that buy signal. So that's this one could be real close. Nvidia had a down day yesterday. I thought these chip stocks could pull back a little bit further, but this one's already had a bullish reversal day. It's kind of kept within this tight sideways range. It's real close to going back to a buy signal, although again, you might want to wait for it to break out first with their market conditions the way they are. That was getting real close. ZS, if you remember when I talked about this on Tuesday, I said this looked like wave A, wave B, and we're expecting kind of that wave C down. Well, boy, it gapped up, and then it did give you that possible wave C down. Now you get a little bit of a bullish inside day. We'll see if that takes off again. That one still has a ways to go, though, to get back to that buy signal. It's on the left side of that hold range. And this is the one we added today, right? CAM, yep. So then we added these ones today. So that's kind of our watch list there. Again, there's some that are looking, potentially they could be right there and we could jump into them. And that's what you want to be doing right now is you want to be preparing. You don't want to be being aggressive yet, but you want to have a list of stocks if the market does start looking more bullish and acting more bullish, you can jump in and trade it. So keep an eye. Let's wrap things up here today. Let's keep an eye tomorrow. That jobs report could throw the market either way. If the market is rallying from here, it could be the trigger that causes the market to rally. Let me pull up the S&P here. if if it's viewed as being very negative, it could be that gap down that we're looking at, get a big gap down, and then you'd want to see if it starts rallying off of that. Now, it doesn't have to immediately start rallying off of it. It could gap down, have an intraday low, and then come roaring back up near the close. You get a kind of a bullish hammer formation. But that's, so we might not get the confirmation of a reversal until later in the trading day. But again, that's what I'd be looking at. That'd be a stronger bullish reversal, than what we've been seeing. So, all right, that's it. Have a great week. Have a great weekend, and we'll see you on Tuesday for the next market update. Bye now.